Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, what else can we speak about but the national budget, which is due to be read later this afternoon? What are the things that we need to look for, and how is it going to affect you eventually in terms of your wealth as well as your investments? Let's just look at some of the key statistics from what we have been able to glean in already published reports, such as the central bank report. First of all, revenues. Revenues have been declining for the past 3 years. And when you look first at the first graph, what you would see is that the breakdown of energy and non-energy over the past 3 years. This is from the period October, the beginning of the year, to the end of July, that it's 10 months in to the fiscal year. What are we seeing? We are seeing a significant decline in terms of the revenue take, both in terms of the energy sector as well as the non-energy sector. So from a non-energy income revenue of 27 or 28 billion, goes down to 22 billion. More pronounced as well is the energy sector. When you look to the left of your screen, energy revenues in 2014 to 2015, 16.3 billion, down to 6 billion by the end of the 2017 year. So these are things that we have to look at very carefully. The decline in revenue is not corresponding with adjustments in expenditure. So when we go to our next graph, what do we see? We see the expenditure figures being pretty much flat over the past 2 years, even though you've had significant declines in revenues. And transfers and subsidies, that red block on your screen, and to the right end of your screen, $22.5 billion, the biggest chunk of the expenditure framework. Very difficult to adjust, especially for social expenditure. It is very difficult to adjust, but there is room, let us say, in terms of transfers and subsidies to the state enterprises, and a close look needs to be done for those non-strategic losing enterprises as things continue to be very tight. Next on our list, let's look at what is happening with the deficit. And you can see, based on the reduced revenue and the pretty much flat expenditure over the past 2 years, the deficit, that is the difference between revenue and expenditure, is growing. And it has grown, based on official statistics, it has grown to $12.1 billion, and we've been reading in the newspapers that it may be $10 billion. Whatever it is, it's very significant when you look at how the deficit has been increasing from 3.2 billion in the 2014-2015 year to 7.5 down to 10 or 12, as the case may be. 12 for the first 10 months. What can be done about this? I think the immediate actions will have to be increasing taxes that can be collected in the immediate term, and cutting expenditure, of course, is the other area. But how do you do that? We've talked about several things. Drawing down on the Heritage and Stabilization Fund, as you would see, there have been 2 drawdowns. This is in US dollars. There have been 2 drawdowns in June 2016 and March 2017 in the order of $250 million US and 3/8 billion US. Other things that have been proposed, apart from taxes and so on, is the sale of assets. Now, here is the challenge with regard to the sale of assets. The sale of assets takes some time to deliver. We've seen in this year that the FCB APO and then the next APO is TTNGL raised funds. FCB about 1 billion against the 1.5 billion that was targeted, and TTNGL the full amount of 0.85. But other things have not happened. The sale of the CLICO and CL Financial assets for payback of lendings to those enterprises have not happened, and we are now into a legal dimension which may further delay. The other players have not come through in terms of TGU, that planned sale have not come through. So there are delays as far as that is concerned, leading to the deficit. The 800-pound gorilla in the room at this point in time is currency, and what is going to happen both in terms of the alignment of currency, access to currency, and pricing of currency. That is a very difficult and sensitive situation, and that is a situation that will certainly have to be addressed more fulsomely in the budget today. Net official reserves, as you see from this graph, falling. Import cover, that is the cover in terms of the number of months net imports that we have, has been falling down to 9.6 months. Still a pretty healthy figure. But if you look at the reserves, that is the total of foreign exchange, US dollars or the hard currency that we have in the pot, it has fallen from a high of 10.6 in 2015 down to $8.7 billion. That's the big question. I think that is the question that will impact the pockets of individuals. Your wealth is going to decline if you have savings in TT dollars and the currency exchange. The deficit has been growing, and it is because revenues have not been realized at the levels that we have, that was expected or budgeted, but expenditure is sticky down, in meaning that we have not been able to cut expenditure in any shape or form. Now, if we do, and we do too much cutting of expenditure, you run into a free fall in the economy in terms of economic decline. So you are caught between a rock and a hard place. The problem I see is, while there is difficulty in adjusting revenue significantly, we need to adjust, in adjusting expenditure significantly, we need to bring expenditure up, revenue up to a level where the deficit is cut.
Where do we look at in terms of revenue projections? I know you had some graphs earlier. In terms of projected and the actual realized amount, what are we projecting and why have we not been able to reach that?
Well, we'll wait to see what the Honorable Minister is projecting in terms of revenues. But in many of the cases before, whereas, for example, if you take VAT, the expectation of VAT revenues have been below what was realized. If you take, for example, the inclination towards a property tax, that has been delayed. If you take the sale of assets in terms of assets that could be sold to close the gap, the main player that has been affected with legal issues, I believe, the CL Finance and CLICO. Remember, between CL Finance and CLICO, they own upwards of 25% of Republic Bank. Yeah. A sale of 25% of Republic Bank at this point in time will generate $4 billion. A sale of the Angostura Holdings, or their 78%, that is CL Finance and CLICO, will generate $2 billion. These are the big ticket items that have been caught in traffic, and those are the things that are causing the delays in the realization of revenue each year. And it is a very critical situation that we are seeing this particular year.
Now, when you talk about these one-off items, so you look at the sale of CLICO, which is now, I'm expecting, going all the way to the Privy Council. So I don't know how they're going to get around that right now. The property tax issue, VAT, if they've been not able to do that, does that mean that the deficit is going to be even wider? And what are the options now available to them? Are we looking at the possibility of an increased tax structure? Is that the only option available?
It would seem that the immediate collection of tax should be focused on more direct measures at taxation, whether it be income tax, whether it be corporation tax, even a wider raising the VAT levels and the collection of VAT. Those are critical things. The other matters will take time to come to realization. And what is needed is an immediate inflow. The adjustment to, for example, the fuel subsidies. Those are some of the things that are that are immediate. So the Honorable Minister is going to have to look very critically at the immediate actions that can generate the revenues, as well as where he can cut in terms of transfers and subsidies. I've said that it is very difficult to adjust expenditure in terms of the social net. What he may have to do is look very critically at the subsidies to loss-making state enterprises, where he can make some urgent and immediate cuts.
You know, that's interesting that you raised that point, because I know when you look at our transfers and subsidies, Subash, they're a lot higher than our CARICOM neighbors, and the way, but some may argue the way we calculate in terms of that lump sum and that pool, that there are some items in there that should not be there. Now, that being said, and taking that out of the equation, if you look at the transfers and subsidies to the loss-making state entities, which are quite a lot, what would you get rid of immediately?
Well, I would take the first question that needs to be asked is what are strategic and non-strategic? For example, a critical question might be, what are we going to do with CAL? The last set of figures that I saw was that CAL was losing some 60 million US dollars. That may have been a year or two ago. But if that situation continues, is CAL a strategic investment? Do we need it for purposes of national security or national access that cannot be replaced by other entities? That is an example of what I'm saying, and those are significant costs that are involved in terms of the expenditure and the subsidies and transfers to loss-making state enterprises.
Now, in terms of the transfers and subsidies moving forward, what are your expectations today? The Minister of Finance obviously is facing a dilemma. He has, I think the Prime Minister's conversation was sort of a door opener, and he's been having these conversations, letting you know things are not, it's not going to be business as usual. But do you think they've done enough to say that we are going to get out of this crisis? Because I think that's where we are.
Well, this crisis, as you put it, has been brought about by a significant adjustment in energy prices. And it does not seem that energy prices are going to get back up to the levels, let's say $80 to $100 oil price. That was the basis upon which we increased expenditure and ratcheted up expenditure over the past 8 to 10 years, shall we say. So the term new normal may apply to us, where revenues are much lower, and we are going to have to systematically cut expenditure so that there are other implications. If we don't, and we continue to borrow and borrow more, our credit rating is going to fall, our cost of borrowing is going to go up. All of these factors have to be weighed and put in balance as we seek to manage our finances going forward. Bottom line, we are going to have to cut some expenditures, and we are going to have to increase taxation revenues, and we are going to have to cut subsidies.
What are we going to tax again?
Well, we can adjust income tax. We can adjust income tax upwards across the board. We can cut certain expenditures, some of which I have mentioned. We are going to have to cut subsidies. All of those things are going to have impact in terms of spending in the economy. And the economy is going to have to adjust to a level where we can, in many areas, seek to be competitive. That is more medium term, but immediate is to cut that deficit.
Now, you know, you talk about taxation. You looked at income tax as one of the issues. I already think I pay too much in tax as it is, Subash. So yes. Do you think, and I see that The Guardian has looked at the issue of fuel subsidy rate hikes for public utilities, which I know the RIC has already commenced that consultation process, and vice tax, which is something that we routinely do. I mean, I think it's lacking creativity if we once again look to adjust a vice tax again.
Well, the question is not about creativity. It is about pragmatism at this point in time. We can't continue to spend more than we earn. When we do that, we increase our borrowing. And then our cost of borrowing goes up, and our ability to repay is impacted. I believe that you are going to see today some adjustments in terms of the alignment of currency and the pricing of currency. Because
now that's an interesting thing, because they have pegged themselves into publicly stating that they are going to continue this dirty managed float that we have,
Yes.
where they're not going to go beyond 680. I think that is a bracket that we've looked at.
That
How
was-
realistic is that?
That was at a particular timeline. I don't think it was into perpetuity. And these are some of the adjustments that will have to be made, because it is going to, in a sense, that adjustment to currency is going to put some dampening on demand, consumer demand. That doesn't help the economy.
It doesn't, because
but
it's going to
could-
be a spiraling effect through everything else.
But it could help the fiscal situation, because government collects most of its taxes from the energy sector in US dollars. As there is an adjustment in the rate, its revenue in TT dollars will be adjusted. Even so, in terms of the Heritage and Stabilization Fund, its revenue brought from US dollars in the Heritage and Stabilization Fund will also be increased in TT dollar terms.
Now, looking at that, what do you think when you talk about you're going to see some adjustments? There's a thriving black market as it is, and I think if you look at the rates, 7.58, there are people going all the way to 9 because of the demand being so much more than the supply in the system. What do you think is going to be the fate of the currency today?
I think we have to move the currency more to where the market is, the unofficial
But so the market goes all the way to 9 sometimes.
Closer to where the unofficial market is, because it's going to do two things. As the price goes up, the demand will be adjusted, unless there is that demand for that is used for capital flight to move monies out of the country. But generally, you're going to get some dampening in consumer demand. And that might be an important starting point to readjust and realign the economy to the new realities. It's harsh, but it is the reality.
I don't know if that's something the population would be very amenable to. I understand that we are in precarious situations and the government is in a conundrum. But what I think I can express some disappointment is that I don't think there's been enough movement in the non-traditional sectors and the non-energy sector to generate income to get us out of this. So now I feel, because of the mismanagement and the incompetence, that the population is being asked to pay.
But that question of diversification has been on the cards for 25 or 30 years. And not much has been done about it, and we have been afflicted by what is called the Dutch disease, where we rely so much on energy to the detriment of the other sectors. Now, let's put it in straightforward terms.
Right.
If you are going to invest in agriculture or invest in tourism, agriculture is 0.6% or thereabouts of the economy, of the GDP. So you are not going to get a quick fillip to the economy. What you might get is an improvement in productive employment. So I support the idea of making some shifts from what is traditionally called CPEP to FARMPEP, which is putting more people in productive employment in agriculture. Secondly, tourism. When you talk about tourism, tourism is about 2% or 3% of the economy. What are you going to do, even with the best intention? You are not going to get quick fixes in terms of contribution to GDP via tourism, but you will get, and you should get, a higher rate of employment.
But we didn't reach here today, Subhash, and that's my point.
That's the point.
We have not had the political will under successive administrations to understand the consequences that are associated with the blessing of oil and gas.
We did not reach here today, and we are not going to get out of our situation immediately. That is the corollary of the amount of time that we have been stuck in a one-horse economy, and I say one horse as energy.
Your closing comments, Subhash. What do you want to hear from the minister today? What do you not want to hear from the minister today? Because I think everyone has put forward their wish list. What is the one thing that if he says today, you will think, you know what, Mr. Imbert, I did not want to hear that?
Let me say this. What I don't want to hear, I expect that we will hear today. It will be some adjustment to the currency, necessary. It will be increase in taxes, necessary. And I am looking forward to cuts in expenditure, identifying those areas that are somewhat wasteful in the state enterprises. And that is also going to impact employment to the downside.